Hello guys and welcome back to the channel. So in this video I want to speak to you about what I have learned from being right on Palantir, changing from a technical to a long-term investor, and how Palantir has changed me as an investor and how I will apply what I have learned moving forward. So this is not the usual video. Here I'm going to be talking about myself and my investor viewpoints, and I really hope it helps inspire you and gives you some new viewpoints. So as always, if you like this content, please make sure you hit the like button and subscribe to the channel. And you can follow me on Twitter. Vince is bullish is my ticker symbol, and it's been blowing up, so I must be doing something right over there on Twitter. So let's get into the video, guys. So first and foremost, what I have learned is that your valuation is always wrong. And the question is, how wrong are you going to be and in which direction? In Palantir, I've been wrong both ways. So it is actually quite funny. I bought Palantir at $12 at first, and I was sure that it was just before earnings, and I was sure that they would report very good earnings. No, sorry, that was my second buy. That was just before earnings. I bought at $12 and I thought it's very, very undervalued. The worst case scenario is it goes down to 10 and it will never go lower. Then it touched 10 and it was just before earnings, and I really bought a big chunk with my portfolio, and they reported a slowdown in their numbers, and it was just very bad earnings, and the stock dropped 20% the next day. And this really taught me that your valuation is based on your assumptions with the company, and those assumptions can change and you need to adjust them. And I never had it in my mind. I know I have this YouTube channel, and I know that you guys watch me, and I try to be as transparent as possible. I'm not a pro investor. I'm also new at this. I'm learning as I go, and I've never had this before. I was a technical trader before, so I had to change my view on the company, which was a negative surprise, right? And then the stock went down to unthinkable levels. At one point, the stock had a 5 in front of it. It was just below $6. And I thought that would never happen. And then I was wrong the other way, because I adjusted my valuation down. And then ChatGPT came around and changed the whole game, right? And this was never in any of my calculations. And as far as I would like to take credit for ChatGPT and on this AI craze and tell you that I was in AI before anybody else was in AI, which is kind of true, but honestly, it's just pure luck. It was never in my valuations that AI would become as popular as it has, and that's why the stock blew up as it has. So I've been wrong 2 times and both ways on Palantir. So I realized from this that as long as you invest in very good quality companies and good management teams, they will figure shit out. And these companies can have bad catalysts and positive catalysts, and this doesn't get talked about enough. For example, everybody talks about, I wish I would have invested in Amazon way back in the day. Way back in the day, Amazon was just a freaking bookstore, all right? And you would have been dumb in your head to invest in a bookstore. And who would have guessed that this company would, with their brilliant management team, stumble upon AWS, which would, be half the internet in the future. And it's just unthinkable, and it's impossible that would be in your thesis when you invested in Amazon. So this concept of, that you don't know the future, and really you can have very negative things happen, so you need to be negative, but also you can have major positive catalysts that you could never even conceive with a stock, okay? And then I learned about myself that I was a little bit greedy, and greed is a very fast way of losing money. So I think that greed is when you try to shortcut how you should normally build wealth. And how you build wealth on the stock market is that you accumulate a lot of income, and then you invest that income into very long-term investments, and then you just let them compound over time. And the problem is, I think that most people think that they collect a little bit of money and then they will trade on the stock market, and then they will have like a secondary income, and it just goes totally wrong. And I realized that people are so focused on their return on stocks that it's idiotic, because as long as you can keep a decent return, a 10+% return, your wealth is all but guaranteed, as long as you invest a lot of money into the stock market and you keep going year after year. And what happens with a lot of people is that they come in with like $10,000, $20,000, $50,000, $100,000. I think that in the grand scheme of things, these are very small portfolios. And then they think, okay, I'm going to do 50% and I will out Warren Buffett, even though he's been doing this for 30 years, but I will be better and I will show everyone. And then instead of, earning $150,000 on their $100,000, they lose a lot of money and then they give up on investing, or, they have a bad taste in the mouth. That's one way. Or they learn that this is just not the way that you do it, and they instead become long-term investors, and then they anyway suffer through the time. They just lost the time when they were trying to be greedy with the money. And to be honest, it's much better to earn 15% on $1 million, which is $150,000, than earning 50% on your $10,000. And I think people shouldn't be so focused on the year to year, how much percent they make on the money. And this is what I was. And this is where I understood that I was being very, very greedy. And actually, the reason why I got invested into Palantir is because I got lucky with the bear market. And the reason why I got lucky is because I had very high assumptions and the price became crazy stupid, and I could see, okay, I can make at least 30% per year if I invest into Palantir at this price. Okay, and otherwise I would not have invested into Palantir. And this is where I was super wrong. And then I was very lucky because, with the bear market, the price kept coming down. So I could always make sense that, okay, I still have the 30% return. I still have the 30% return. And I realized that this is not so important. I actually missed investing into great companies because I was so stuck on having to have this margin of safety of 30%. And for example, Shopify, it came down to very close to my 30% target price. And one, I didn't have enough money because I'm still also working on my income. And number two, even if I had the money, I wouldn't have bought because it was a few dollars off my target price. And I see now that that's idiotic. And to be honest, this exact thing that I'm talking to you about happened because Shop went to the earnings. They announced that they're completely changing their business model, and the price is like 2 to 3x from where I could have invested into. So it's not good because I missed out on a company that I could have owned for, the next 10, 20, 30 years that could have been a multi-bagger compounder if I wouldn't have been so stuck on the valuation. And this is especially important because I believe that we all need to switch gears and we're not in a bear market anymore. In this past 2 years, we have been taught that if you just wait, your stock is going to be cheaper and cheaper. And you just wait a bit more and it's going to be cheaper. And I'm telling you, this is not the case anymore. I bet you really miss Palantir at $6, $7, $8, $9, even $12. I remember people who were selling at $10 because the stock is going to go back down to $7. And boy, was that a mistake. And this can happen to a lot of very good stocks. So I'm still refining my investment strategy, and I'm very much, basically I'm 85% of my portfolio into Palantir. And I don't have free liquidity, but I refuse to sell Palantir because it's such a good company. I'm in it for, as I said, the very, very long time. So I'm refining my strategy, but definitely if I have a target price for the stock and the stock is below that target price, I'm just going to go ahead and buy. And if it goes lower, so be it. I'm not into it for, I'm not a trader, basically. I'm for the very, very long term. And in the future, I'm going to have a very, very concentrated portfolio of maybe max 10 companies that I know inside out the way I know Palantir. And I'm going to cover these stocks on the channel. And I will not be valuation focused. I will be quality focused on the company. And sure, some stocks will disappoint, but I'm sure that some of the stocks that I will buy will be, 10 baggers, potentially multi 10 baggers, and they will more than outdo any losses where I might be wrong on companies, okay? And the truth is, long-term investing is very, very simple. If you can be simple, this game, as Warren Buffett said, is really rigged in your favor, because if you just hold the stock, just because of inflation, the stock price with time, it will go up. So the time is the best friend of a good investor and the worst enemy of a bad one, right? And I really feel that most people cannot understand how simple this game is, and they overcomplicate it, and they want to see results. They want to have 100% in the next day, the day after they bought the portfolio. And that's just not the correct mindset. And this is something that I really, really learned with Palantir, and I will take with me. I will stay humble, even though I was very right about this stock. But it was also, a big part of it is luck. And I am someone who will admit this. And yeah, I really hope that you guys agree with some of the points that I list here. Make sure that you hit me up on Twitter. Vince is bullish. And Palantir, I'm going to hold on to this stock for the life of me. But I am going to start opening positions in other companies, and for sure I'm going to be covering these, and I will be using this investment philosophy, and I will refine it and make some videos on it also in the future. So let me know what you think in the comments, and I'll see you in the next video. Ciao, ciao.